Welcome back to the Dividend Diplomats YouTube channel, everybody. Got Lanny, Triple L, Bert the Herd over here. The Dividend Diplomats, we are pumped up to talk to you about two behemoths in their sector today.
Two giants. And Bert, before we get in, you need to do two things. Subscribe to our channel, give this video a nice thumbs up. Bert the Hurt and Triple L ready to bring you a dividend stock showdown for two giants in their industry.
Oh yeah, Lanny, you got that right.
Will you listen up, Jack? We're going to put these two stocks toe-to-toe in the ring to see if one is a dividend stock to buy and which one is better than the other.
That is absolutely right, everybody. So get ready, get pumped up. We have a dividend stock showdown here. The prices in this video are going to be as of September 28th, 2021, and that close on that day. So we're sneaking one more in here before the end of September.
That's right. Trying to punch it through the end zone, just like Nick Chubb.
Yeah.
Let's go, Cleveland. Where you at? So yeah, as Bert said, the stock market continues to be a little bit volatile over these last few days of September. I'm not sure if you've been purchasing stocks. I know Bert, he's been busy out there in the stock market. I know I've been busy in the stock market this week, regardless of what it's doing. And Bert, when you looked at these two dividend stocks, what's the screener that we're about to put them through?
The Dividend Diplomats Dividend Stock Screener, where we'll look at three simple metrics and a bonus metric. PE ratio less than the S&P 500, dividend payout ratio less than 60%, a history of increasing your dividend, where we look at the dividend growth rate and how many years consecutive you have increased that dividend, and that bonus metric is the dividend yield. We run every stock we research through our famous dividend stock screener.
All right, Bert, what is the industry we're diving into today?
Well, looks like there are some barrels of oil sitting here next to us, Lanny, to our left and to our right. That's the sector. We are heading into the oil and gas sector.
You must have been storing some of that oil because they ran out of places to store it last year. So you held on.
Thank you. Well, I must have bought oil when it was cheap, because now I'm sitting on a pretty nice valued asset considering the price of crude continues to climb. And I think that's partially why we want to look at some of the oil companies in here. You're seeing a boost in the sector based on the price of crude. It now crossed $80 per barrel, Lanny, I think recently. It's getting up there once again.
Wow. Yeah. And, it has been on an absolute tear, kind of hanging around that mid 70 mark steadily. But as Bert says, it has been popping up. Inflation is really starting to be seen, especially at the gas pump. So that's why we're looking at this industry, because the rebound is real. The rebound is real. And Bert, what two dividend stocks are we taking a look at?
All right, everybody, we said behemoths. We were not messing around here. ExxonMobil, ticker symbol XOM, and Chevron, ticker symbol CVX.
Wow, two beasts in their industry, Bert. And let us hear it from you. How many of these two do you own in your portfolio?
Absolutely right, Lanny. I mean, truth be told, we had to scope this down to just these two. We could also have considered Shell, BP, Total. Oh man, the list goes on of all the major companies we could have considered, but we wanted to focus on these two. We both own shares in these two companies, so we're excited to see how they're performing. Well, oh, you don't own Chevron? My bad. All right, everybody. Instant fact check right there by Lanny. I own both the companies. Lanny only owns Exxon. My bad, people. My bad. But chances are a lot of
Bert brushes his teeth with oil.
I do. I told you I have a bunch of barrels sitting right over here. So everybody, the prices have been climbing for these two companies. So even with the prices climbing, is it time to keep buying? Just to throw some stats at you here, oil got slammed during the pandemic as revenues and the price of barrel. Yeah, that's exactly right, Lanny. You gave them a nice body slam. They lost their top line revenues. Outside of Exxon and Chevron, a lot of the companies in the sector were slashing their dividend to pay off the debt because they just couldn't pump out the cash flow to cover the dividend. Exxon and Chevron held on. So to give you just to give you a picture of how much their prices climb over the last 52 weeks, Exxon is up 74.8% from its 52-week lows, and Chevron is up 43.76%.
Wow. Going right with that barrel of oil, I guess. And for those that don't know, Exxon actually is a $254 billion by market cap company, and then Chevron is right there at about 200 billion. So these are not just two big dogs in their industry, but these are just two large companies, period.
Weren't there rumors last year, Lanny? Correct me if I'm wrong, that a potential Exxon and Chevron merger that never actually happened?
Oh, it's true. It's damn true, Bert.
Well, anyway, even with the prices rebounding, they're still showing potential signs of undervaluation. So that's why we are going to run them through the stock screener today. We're going to go metric by metric, comparing each one of them and to each other, and then if possible, the broader market in general. So let's start with that price to earnings ratio. Again, remember, prices as of September 28th. Exxon's closing price was $59.92. Their forward 2022 estimated earnings are $4.92. It's a PE ratio of 12.18. Lanny, how's that compare to Chevron?
Well, I'll tell you what, not too shabby. I mean, Chevron currently trading at $103.36. Analysts are expecting close to $8 at $7.80. So when you do the quick math, share price divided by that forward earnings, that P ratio is barely over 13, so slightly higher than ExxonMobil.
All right, there it is. Both are, Exxon, I should say, is cheaper than Chevron. Both are cheaper than the market is what I was trying to say. I'm fumbling a little bit over my words tonight, everybody. I apologize.
This is where it gets interesting, is when you look at the second dividend metric, the dividend payout ratio, which screams to the safety of the dividend as well as the ability to increase it forward. So Bert, what does Exxon's dividend payout ratio look like?
ExxonMobil's annual dividend is $3.48. Divide that by the EPS of $4.92. That gives you a payout ratio of 70.73%, above our 60% threshold. How's that compared to Chevron?
This is where it gets a little bit interesting even more. Chevron, again, ticker symbol CVX is their stock ticker symbol, pays an annual dividend, obviously over 4 quarters, of $5.36, divided by $7.80, gets you a nice solid 68.72%, slightly below the payout ratio. So they were slightly above on the price to earnings, but Chevron's dividend is looking just a little bit safer.
Yeah. All right, let's move into metric number 3 here, the dividend growth history. Exxon has a 5-year dividend growth rate of 3.31%, and they have increased their dividend for 38-ish consecutive years. I'll come back to Exxon here after you tell us about Chevron here, because I think we're going to peel a little bit more into that.
Well, you listen up, brother. Chevron's got 19 years of consecutive dividend growth, increasing it during, this tough time. They did it back in April, actually, to the tune of just under 4%. They've been growing the dividends steadily at a higher clip than Exxon. 5-year average obviously is lower, but at 4.24%. But we'll get into why the growth rates are low as well later on in the video.
Yeah, absolutely. So let's look back here at Exxon. Going into this year, they were a dividend aristocrat for 38 consecutive years of dividend increases, unprecedented for the oil sector, above and beyond every other one. That's what always made ExxonMobil top of class for dividend growth investors. However, unlike Chevron, who announced that dividend increase in April, we're still waiting on Exxon's dividend increase announcement here in 2021. We always talk about how to be an aristocrat, you have to pay a higher dividend in this year than in the current year. If Exxon does not announce a dividend increase for that 4th quarter dividend payout, their dividend will be the same in 2021 that it was in 2020, and they are going to lose that dividend aristocrat status.
A lot on the line for ExxonMobil.
Yeah,
dividend stock of ExxonMobil right now?
Their next dividend announcement is going to be at the end of October, so it'll be fascinating to see. But
4 more weeks.
yeah, but the increase in the price of crude could not have come at a better time for a company that's looking to potentially increase its dividend, because they need the extra revenue, they need the extra earnings, the extra cash flow to justify increasing that dividend. So this could be, the stars could be aligning for a very small dividend increase to keep that aristocrat status alive.
I can't wait to see what ends up happening to ExxonMobil. Do they keep this streak alive? Another Undertaker reference. Do they keep battling the oil WrestleMania right now, the dividend aristocrat mania? For what's your take?
I think they are going to spin off their TV content assets and cut their dividend just like AT&T. I'm kidding. I'm feeling good about a very small dividend increase. I think you could see a 1% increase, a fraction of a penny here, just to keep the streak alive, especially with the boost in revenue and earnings. What are you thinking, Landy?
Yeah. I think, I could see them doing, either 0.5 to 1 cent increase per share per quarter, somewhere around that 0.5%, 1% dividend growth.
Yeah. So time will tell. We'll find out in a month. Let's go. Do it. Do it.
Do it.
Let's go, Exxon. All right, to the bonus metric, the dividend yield. At the recurrent dividend of $3.48, divide that by 59.92. That gives you a dividend yield of 5.81%.
So Chevron, on the other hand, which, keep in mind, the S&P 500 overall is yielding somewhere around that 1.3 to 1.5% yield. Chevron, similar to Exxon, is over a 5% dividend yield. Chevron stock currently yields 5.19%.
Big oil, big dividends. That's what we are talking about.
4 times the S&P 500 with Chevron, and over 4.5 times the S&P 500 with ExxonMobil.
Yeah, so to summarize here, ExxonMobil's PE ratio 12.18, payout ratio 70.73%, 5-year dividend growth rate 3.31%, dividend history 38 years plus, with a question mark to see is that going to continue or drop down to zero, with a nice yield of 5.81%.
Chevron, on the other hand, ticker symbol CVX, PE ratio at 13, payout ratio at just over 68%, 19 plus years of growing their dividend at just over 4%, with a handsome dividend yield of over 5%, Bird.
Fantastic.
Who wins the battle? Who finished it off with the Hogan leg drop? Or does somebody lay the Macho Man flying elbow drop?
If I were going to pick one of the two right now, I would have to lean Chevron. What I like about Chevron, even though their PE ratio is just a hair higher, it is still significantly undervalued compared to the market, which is the ultimate piece that we are looking at. To me, it comes down to the dividend history. Chevron walked a tightrope during the pandemic that not too many other companies could. You saw Shell, you saw BP cut their dividend. Chevron hung tight. They kept the dividends right, and they still found a way to increase and keep that streak alive when times were tight. That is a nice management team, in my opinion, and that's what I want compared to Exxon, which is leaving dividend investors in flux at the moment. What do you think, Lanny?
Chevron right now, I think they even have a better balance sheet as well from just a overall debt perspective. They've been a stronger company overall the last 3 to 5 years. We'll have to really see kind of what happens in 2022. But I think Exxon also has their back against the rope, and they really need to give confidence to that shareholder, which is why we both, I think, are predicting that dividend increase come the end of October.
Yeah, so there we have it, everybody. Lanny and I are both leaning Chevron here. Let us know which one of the two you like better in the comment section below. Or is there a third entrant that you think should be coming running out, disrupting the match, and pinning to grab the championship and steal it from Chevron?
question is, Bert, are you buying Chevron?
I don't think I'm buying oil right now. Not to say others shouldn't consider it at their prices. I already have a large oil allocation in my portfolio, so I'm sitting tight on the sector because it is such a large part of my portfolio. I want to continue diversifying. What about you, Lanny?
You know, this is where people are gonna like fall over in their chairs. My wife owns Exxon. I own Shell and Total, and obviously Kinder Morgan. And let's not even talk about Oxy. I'm okay with oil. I've got a pretty good position with multiple companies, and I really probably need to take a look at my positions in oil to see if I want to shrink them and reallocate elsewhere.
I think we're all sitting in our chairs still. So, but I think it's fair. But if you don't have an allocation in oil like Lanny and I do, I think it might be time to consider buying the sector. The metrics, obviously conduct your own research, see if you want to, but Exxon, Chevron, and some of the oil companies warrant a deeper look if you're looking to buy an oil company.
We appreciate that, everybody, for coming around the video. If you haven't already, definitely give that video a thumbs up. Let us know in the comments what you just even think of big oil right now, oil in general. What do you think this industry? And as Bert said, if there's a different dividend stock that you're buying now within this industry, I mean, outside of the pipeline companies, I know everybody loves, there's a few of them, we're not going to name names, but from like big oil main players, when it comes to BP, Shell, Total Energy, Chevron, Exxon, Marathon, which one is the better one? Let us know in the comments below.
And subscribe to our channel. Give us that thumbs up if you haven't, everybody. We appreciate it. Thank you for tuning in with us today.
That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.